for Kiwi appliances. And just in the class now, this is what I want you to do is do what an analyst would have to do, would be to forecast the earnings going forward for 1 year and make an earnings forecast for next year. So what I want you to do is take all these line items and using the information I've given you in the question or any other assumptions that you think relevant based on the trend, make a forecast for each of the items for calendar financial year 15. So you forecast the revenue, the operating costs, the borrowing costs, the impairment charge, depreciation, amortisation, and the tax. So just take 5 minutes, work in pairs if need be, and this will be a very useful exercise to forecast a company out 1 year. So just take 5 minutes to do that now, and then I'll see how you've all gone. We'll compare notes. Fantastic. Okay, let's just see how you went with some of those line items. So I've put up, I'll just draw through we'll work through our answers together. Has anyone got a revenue forecast? Who's that? Chad. How did you get that, Chad? Yeah. Yeah. You don't have a reason? What's that? Yeah. 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 Right. So yeah, there'd be a currency benefit. No, they didn't actually sell in America. They manufacture in America. Yeah. So they wouldn't. That might help their costs, but not their revenue. They only sell in Australia and New Zealand. But I think they've actually closed their facilities in Pittsburgh. So I'm not sure if they run in America anymore. It's a reasonably argument that lower interest rates would keep up consumer spending. But what's actually happening with electronic retail is because of the depreciation of the currency, probably costs are going up. That might be a positive factor there. But sentiment's been pretty bad for JB Hi-Fi and other sort of electrical retailers lately. I think if you sort of look at the trend, 160, 165, you'd probably be happy if you did 170. So I think you're a little bit too bullish, but it is a possible answer. What did you think on cost, Chad? Very good. Yeah, there was a salary increase. Anyone got a cost answer? How big was the salary rise? 5%. So you could assume most costs were salary related. So if your costs went up 5% and your costs were 55 million, you'd be going up just over 2.5 million. So I had 57.8 just based on that 5% factor. Okay? Now the borrowing costs, in the data, it said actually the borrowing costs were increasing by 100 basis points. That doesn't mean 1% of the borrowing costs, that means 1% of the debt. So how much would that cost you if you're paying another 1%? What was the bank debt, the long-term bank debt? It was 400 million, and you're paying another 1%, so you're paying another 4 million. So your borrowing costs would go to 40 million. Now, there's the impairment charge. Anyone, did you have an assumption for that? Did you get to that, Chad? Lily, do you know what the impairments would do? Have a guess now. They were 5 million, 7.5 million. What would you say for the next year? They could increase further. I actually had them going up. Well, they went up 50% last year. I just had them going up at 25%. But it's pretty hard to know. You'd have to really do more interrogation of the company to work out what was happening there. These items are generally static. So that leaves us with 42.8 million. If we apply a normal tax rate of 30%, that would be 12.8. And that leaves us with $30 million NPAT. So you can see that profit is actually down 7.9% versus calendar 14. So basically what happened is we didn't have enough revenue growth to offset the cost growth. or pay for the more debt and more impairments. So this is obviously very arbitrary. We don't really have enough information to do an accurate forecast on this. But it gives you a good indication of, basically this is just an example of how you would model a company. In the assignment question where I've asked you to look at GE, there are a lot of different divisions, so I don't expect you to do a model in this sort of detail for the assignment question, but just read through the commentary and see what broad assumptions you could come up with for EPS. Really, it's sort of this bottom number down the bottom is the one that sort of is the key driver. Is it positive, negative, double digit, single digit, high single digits, low single digits, low double digits, that sort of range. Now, this is really sort of what you've seen today is a typical analysis that an equity analyst would do on a company. They would do the historic ratios on the company, and then they would use that historic data and look at those trends to make a forecast going out. You might even make multiple years forecast. If you thought you were accurate, you could do a 5-year forecast, and then you could actually DCF or NPV the future earnings. Next week we'll be talking about the different valuation approaches. The PE is kind of a crude, simplistic single measure, whereas a more accurate measure is to do longer term projections, if they can be done accurately, and discount those back with time value of money at the weighted average cost of capital. But what we'll explain next week is that it's very hard to get really solid projections, robust forecasts going out. And what we have is what we call an expanding funnel of doubt. So the further out in time we go, the less certainty we have. So, for example, we really don't know what company's profits might be for a company in the next quarter, or the next 6 months, or the next year. So how accurate would our forecast be 5 years out? Are there any questions on what I've covered off tonight or about the assignment before we wind up? Yep. We don't really want spreadsheets. Preferably not. We just want written answers with simple calculations so we can sort of check it. We don't want to be checking through spreadsheets, sorry. You can use a spreadsheet to do your numberings. If you like, you can attach it, but probably just attach a PDF of it rather than the whole spreadsheet. But don't go to a lot of trouble building big models. Just a simple A4 spreadsheet would be enough as an appendix. Any other questions about the syllabus or the question? Okay, so next week we talk about the valuation. I think probably by Wednesday we'll have the slides up for next week's lecture. It's quite a long lecture with all the different valuation methods. Thanks for your time.